Hello, folks. We're going to give our members 1 extra minute to come into the room, and then we'll start. Thank you. Okay, I'd like to welcome everyone to the New York New York Alternative Investment Roundtable podcast for August 20th, 2024. I'm Robert Akeson of the Riverside Management Group, the moderator. Today, we're going to explore a critical topic for investors: operational due diligence, otherwise known as ODD. To guide us through this topic, this very important topic, we have two industry leaders and subject matter experts. We have Michael Levien, co-founder of LexPRO Research, and Michael Merrigan, founder of Shadmoor Advisors. And allow me to say a few words about our panelists. Michael Levien has been working as a private investigator since 1992. During his career, he has managed numerous international cases worldwide and thousands of investigations here in North America. Before co-founding LexPRO Research, Mr. Levien worked for a consulting firm specializing in international intelligence gathering, crisis management, overseas business facilitation, and corporate due diligence. He also managed complex insurance claim investigations, and he conducted various risk and security assessments globally. Mr. Levien has also worked on civil litigation disputes, counterfeit merchandise investigations, shareholder proxy battles, environmental investigations, insurance fraud, and corporate embezzlement cases. Mr. Levien has several years of experience conducting field operations such as surveillance, undertaking both discrete and traditional interviews, and researching public records. Mr. Levien holds a Master of Science in Protection Management from the John Jay College of Criminal Justice and a Bachelor of Arts degree from the George Washington University. Prior to founding Shadmoor in March of 2014, Michael Merrigan was a managing director at Godex Fund Management, a fund of hedge funds with AUM exceeding $5 billion, and was a member of Godex's investment committee. As global head of operational due diligence at Godex, he led a team of 4 individuals based in the US, Europe, and Asia that conducted ODD on over 150 funds with varying investment strategies. Prior to his 4 years at Godex, Mr. Merrigan implemented the first in-house operational due diligence program at General Motors Asset Management, one of the world's largest pension plans with assets exceeding $100 billion. He has focused his career on alternative investments, working as a hedge fund analyst at HRJ Capital, a boutique firm, and at Credit Suisse. Mr. Merrigan began his career working in the operations group at Gamco Investors and is a graduate of Boston College. So, gentlemen, welcome. But before we start, I do want to thank our sponsors for their ongoing support of the roundtable and this call. And of course, they include Alston Bird, Baker Tilly, Bloomberg, Deloitte, Grant Thornton, New Mountain Capital, Ultimus Leverpoint, and our nonprofit sponsors, Kaya, the United Kingdom Department of Trade, Fordham University Gabelli School of Business, and the Grand Duchy of Luxembourg Trade and Investment Office. Now, just a reminder to the audience, our panelists will be answering my questions for approximately 45 to 50 minutes. And at that point, we'll open the floor up for questions. However, at any time, if you want to ask questions, please use the button in the lower right-hand corner and type the questions to me, and I will make sure that that the panelists get to see them. So we encourage you to do that, or otherwise wait until the end. Okay, so let's get to it. And let's start with this. Gentlemen, what is ODD and what distinguishes it from investment due diligence? And I'm going to ask Mr. Merrigan, why don't you take us out on this, please?
Sure. First of all, thanks, Bob, for having me. Really appreciate it. In terms of due diligence, I do think it kind of bifurcates into two, offshoots. One is, as you said, is investment due diligence. The other is operational due diligence. And investment due diligence, I think, is really focused on sort of the strategy, the investment strategy, the returns, and how those are derived, including the people, the exposures, the securities, all those types of things. And operational due diligence is sort of everything else. It includes all of the mechanics for how investments are implemented, how they're maintained, how they're valued, how they're audited, serviced. And it also includes all of the governance functions, legal compliance, IT, and all of the service providers and everything that sort of falls underneath the firm. So the ODD piece of it is actually quite wide and sort of getting broader and broader over time as well. So they're very complementary, but they're fairly well segregated. There might be a little bit of overlap in risk management, but overall fairly segregated.
Okay, thank you, Michael. And Mr. Levien, would you like to add anything here?
Yes, thank you for and to New York Alt Roundtable for having this and for inviting me to participate. Just to add to what Mr. Merrigan said, I guess in my view, ODD is kind of more forward-looking, and it's geared towards, is this a good fit? And also looking for ways to immediately improve performance in the future, whether it's eliminating inefficiencies or finding synergies, where investment due diligence, as Mr. Merrigan said, is focused really on kind of past performance and maybe some industry risks or competitors, as well as your return on investment.
Okay, thank you. And gentlemen, why is ODD important to complete? And I'd like to come back to Mr. Levien because I believe the focus of your diligence practice are really people. And as they say, most of the assets of a company, particularly a services business, go up and down the elevator in a day. So what is your view on that? Why is it so important, and why is looking at people so critical here?
Right. So my firm, LexPRO Research, we really specialize in providing background checks, which is just kind of one branch of the overall due diligence picture. We like to say that we're only an inch wide, but we go a mile deep. And yes, it is primarily on the people that we focus our research. And from an academic point of view, past behavior is one of the best indicators, not the best, but one of the best indicators of future performance. And that's why looking at people's backgrounds will potentially shed light on their future actions and future behaviors.
Okay, but if I may follow up with you, Mr. Levien, isn't everything on the internet today? I mean, can I do this on my own?
Well, believe it or not, no. The short answer is no, not everything is on the internet. The internet has made it much more accessible, but the traditional public record sources like the courthouses or town hall or even the libraries, they've always been publicly accessible. The internet, yes, has made it easier to conduct research in other places, but it still takes a professional, an expert, to be able to sift through large amounts of data and really narrow down and focus on what's relevant to you and not perhaps just a name match record.
Okay. And Mr. Merrigan, what about you? Why would you say ODD is important to complete?
I think that there was overall a gradual rotation towards alternative investments, and alternative investments didn't have the liquidity terms that were daily, like a lot of, a typical stock would have, or, a mutual fund or an ETF or things like that. And as you moved into investments, and institutional investors moved into investments that had longer or less liquid terms, um, there was more risk there. And then on top of that, the complication of some of the asset classes that were being invested in also had risks. There were harder to value assets. There was more of assets that needed to have margin, things like that. And then in addition to that, and this even precedes Madoff, you started to see in the alternative investment space some of the well-known frauds that a lot of us are familiar with today. And if you go back to the sort of prudent man rule about what does a reasonable investor do, and I think that's an evolving standard over time. I think we've certainly reached a point in the last, say, 15 or 20 years where people are like, wow, we need to include operational due diligence in the scope of what a prudent person would do when making investments, because of the fact that in recent history, and even as recently as today, there have been a number of very significant frauds, that have, deprived investors of their equity. And so, for those reasons, I think that that's what's made investment due diligence, which was always important. Pretty much now, ODD is on par with that, I would argue, in terms of, the total investment decision that people are looking to make.
And gentlemen, just as a frame of reference and as a follow-up to this question, how much information might you typically find on an individual? Mr. Levien?
Well, in today's day, doing a background on an individual, you could find dozens or hundreds of records depending on the individual's profile and industry. And sorry, just to jump back real quick, another reason for conducting your due diligence is nowadays there's a potential liability that if you haven't discovered something that's readily identifiable, you could be on the hook for it legally.
Ah,
But now coming back to your current question, again, there could be, dozens or hundreds or thousands of records on an individual or a company that you're looking at, whether it's legal filings or regulatory filings, media articles, and things like that.
okay. And I guess where I'm going with this, and I'd like to hear what Michael Merrigan has to say as well, is I suppose someone who's at least in a position to launch a hedge fund, there's got to be some public information, some record about them in the public domain. What happens if you don't find much? What does that say, if anything at all?
Well, so yes, in today's day and age, usually the problem is usually an abundance of information,
Okay.
not a lack of it or a dearth of it. And if there is a lack of information, that could potentially be a red flag, depending on the individual and the industry and things like that. We've looked at individuals who are in their 70s or 80s, and they don't have such a large digital footprint now, but that's just because of the sign of the times.
Sure.
As an aside, we were doing research on a real estate developer, and he had supposedly been in the industry for 25 or 30 years, but we could hardly find any information on him. And in an industry like real estate development, if you haven't been sued at least once, you're not in the big game. And the only information that we found about this individual was from a small town board in rural Virginia that said they had done their due diligence on him and they couldn't find any of his expertise or credentials. And so for us, that was a major red flag, and for our client as well.
Okay. And Michael Merrigan, any further thoughts on this?
Yeah, I mean, I think that the background check piece is another component of due diligence, and sometimes it is incorporated in ODD, sometimes it's in parallel to ODD, but it's absolutely part of the mosaic of making an investment decision. So you have your investment due diligence, you have your ODD, and the background check piece is absolutely critical in terms of moving forward, because strict ODD and strict IDD will not capture all the things that background checks capture. There are a lot of publicly available records, and that is largely what I think some of the background check firms rely on, in addition to references and things like that. But they're not necessarily things that are easily accessible. So, for example, if you wanted to confirm that someone went to a certain university, that's not that easily done just by an online search. There is some sort of, like, real investigative type work that needs to be done, or at least have the ability to have access to databases and things like that, which typically the average person hasn't purchased. So the background check piece, we really, really instill in all the clients we work with, because Shadmoor doesn't do that piece, but we think that that piece is incredibly important. So we encourage all of our clients to do that with a third-party background check firm like Michael's, or a background check firm of another group, because you don't want to make these investments that are illiquid, potentially long-term holdings, where you can't get your money back, and you don't know all of the issues related to the key people. The other piece that's worth mentioning as a sort of tangential point is that not every investment manager, especially the emerging ones, have done background checks on their own employees. So you may be doing the background checks on the employees, but the actual people who employ them at the investment manager haven't necessarily done them, which is obviously a major risk factor, but is another reason why the importance of doing these background checks is so significant.
That's a very interesting point you make there, Mr. Merrigan. And on that note, let me ask you, what areas do you typically cover in your ODD practice? If you're going to rattle off a list of topics, what would they include?
It's pretty broad. I would say it's the organization, it's the people, the systems, the service providers, it's the legal offering documents, the audited financial statements, it's how money is moved, cash, it's valuation, it's legal compliance, IT, operational risk issues like insurance and things like that. So it's pretty broad, but it's all of those things, and it does not include background checks, but as I was saying earlier, we view that as being extraordinarily important, and impart upon all of our clients that's something that they should be doing in parallel with us, or with our assistance through a third party.
I see. And if I may, Mr. Merrigan, I'd just like to ask you a follow-up on that, which is, how important is the business health of the subject, okay, the fund itself? And to what extent is that is that included in the scope of your diligence efforts?
It's definitely included, and it's particularly important because, one, a lot of these investment managers are not public companies. A few of them are, the big ones that we know of, but by far and away, the ones that we're looking at are 15, 20, 75 person firms. They're privately owned by an individual or a small number of individuals, and we don't have access to the financial records of those companies. So the ability for those firms to operate the investments, and with all the risks and controls and systems and HR and all of those things that we expect them to have, insurance, we need to know that they're profitable. And, given a fee structure, a nominal fee structure for a fund, there is a break point that needs to be achieved. And as you look at the smaller managers that have less AUM, less people, the ability for this to be an ongoing entity is definitely a part of the ODD process. And one of the things, there's probably two things we focus on in that respect, which is, one, what level of AUM is the firm at a break-even point where, that doesn't require outside funding either from the founder or from some other third party. And two, is there any debt at any of the management company level entities? So those are the two parameters that we're focused on with respect to that.
So to net it out, I think what you're saying is that money management firms, regardless of the AUM they might have or their style or strategy of investing, there are a constant number of jobs within any firm, and the ability to specialize or not can have an impact on the outcome of the firm, the investment outcome of the firm.
Yeah, I mean, I think, there's a recognition that being in the alternative investment management business is quite lucrative, but there still is, fixed costs to running it,
Yes,
office overhead, salaries, things like that. And, even if you're at a 2 and 20 fee structure, you still have to hit a certain number of AUM, depending on how many employees you have and all those types of things, so that you can be sure that you can exist as an ongoing entity. And then when you have fee structures where people can take money out monthly or quarterly or things like that, you can have, very significant shifts in the AUM you manage, which directly affects your income.
I see. Mr. Levien, would you like to weigh in on this? What areas? I know the focus of your organization is largely on the people, but what other considerations do you make in this regard?
Well, so we have the ability to look at both people or companies. And when we do our research, we're looking at a number of different record sources, things ranging from federal, state, and local criminal records, sex offender records, civil litigation, liens, judgments, bankruptcies. We look at regulatory filings. We do full media reviews. That's both traditional print and broadcast media, everything from the New York Times down to the Sacramento Bee and everything in between, trade journals, business publications. We then also typically round out, excuse me, our research with things like political contributions, corporate affiliations, asset ownerships, and we can then finalize the research with other slightly more exotic research, if you will. You can do either reputational interviews with either provided references or references that you develop. And we also have the ability to do confidential source inquiries and even things so far as put somebody under surveillance, which is extraordinarily rare, but it has happened.
Well, that sounds interesting. So, just to follow up on that, how would that work? If you were to surveil someone, actually surveil them, would you engage a private investigator, or would you conduct that yourself?
Well, so we are licensed private investigators, but we traditionally aren't doing field research like that. We would normally just leverage sources that we have who are experts in that. And again, that's very rare. It's very far out there on the spectrum
Sure.
to do that, but it can happen, and it can shed light on if someone tells you that they wake up, they go exercise, they go to the office, they go home, and that's their life, and that's what you see, then that's the reflection you get. Of course, if they tell you that's their life, but they're out cavorting until 2, 3 in the morning, then you have that perspective as well.
Very interesting, and I'm sure very useful. Uh, Gentlemen, how has ODD evolved since the financial crisis of '08? And I'll ask Michael Merrigan, why don't you take the first stab at that?
Sure, sure. So it's basically probably the single biggest factor is that it's evolved into all asset classes. So let's go back to, there was definitely ODD prior to Madoff, but it was probably, in more of an infant stage than it is today. But I would say that, after Madoff, clearly focusing on hedge funds. And then over time now, it's actually ODD is bled into all the other asset classes. So that could be long only. It even could include separately managed accounts. It certainly includes private equity and venture capital. And so there are, tweaks that happen in each of those asset classes because they have different operational risks, depending on what the types of investments they have and things like that. But the single biggest change that's happened since Madoff is that ODD is now universally adopted in all asset classes. by institutional investors for any types of investments that, are sort of outside of daily liquidity.
And Mr. Levien, you've been involved in these activities for multiple decades, so I'd be curious to hear your perspective on how things have evolved since '08, thereabouts.
Well, there's certainly more regulations in place regarding conducting due diligence and ensuring that there are no bad actors. And for us, the idea or notion of we only invest with people that we know has really kind of gone out the window in light of people like Bernard Madoff, who was very well known and in some circles very well respected. But as history has shown, those claims were inaccurate.
Indeed. And gentlemen, at this point, I would like to offer up two questions that we have from the audience. First being, how do you discern erroneous records, which are sadly very prevalent with cybersecurity issues, et cetera? How do you weigh these checks against the public serious diligence failures on the investment and legal side? Michael Merrigan, you want to take a first shot at that?
Yeah, I'm not sure I completely understand the question, but I'll take a shot
Well,
at
here,
it.
I'll rephrase it this way. So that old saying, junk in, junk out, right? If the data, the information that you're working with, and again, I'm reading the question, trying to understand it myself. If we're consulting with data or information or records that themselves are erroneous, what do we do about that? I mean, we may not even know it's an issue, but I guess, are there any fail-safe mechanisms or processes, procedures, best business practices that both of you might be following to, let's say, guard against this?
Yeah.
I think I got that right.
Yeah. So in that context, what I would say is, and we really tried to double down on this over time, is that the worst type of operational due diligence is when, an investor hires, someone, and then they ask us to go visit or speak with that manager. We ask that manager questions. They tell us the answers that we hope to hear, and then we regurgitate that back to the underlying client. So that's what we need to be doing more of, in general in the ODD society. And I really hope that we've done that here at Shadmoor, is doubling down on confirmation work. So if someone says we manage this much money, we don't just take that for granted. We actually, we call prime brokers, we call banks, we call counterparties. If someone says so-and-so is their auditor, we reach out to that auditor. If such and such manager says they use this cybersecurity firm or compliance consultant, we reach out to them. So the important things that really we think could be raise the operational risk profile to the greatest extent possible, even if they're available in public filings, we double down on doing direct confirmations of those things with the primary sources. So we're not so much relying upon what the manager told us on key issues. And I think that's a very, very important topic.
Yes, and just to follow up on a point that you made, you check with the prime brokers. With respect to AUM, if the fund is registered, shouldn't that information be available on the Form ADV?
It is, but I think that what we have tried to do is that's self-reported. So in other words, the manager's filling out the ADV. And so what we're trying to do is do independent confirmations of all of these key items, so that we're not just taking the manager's word, for granted. And I think that's a very, very important part of doing good ODD, is doing that confirmation work.
Indeed. And just to come back to the question, I think we have clarification on it. What the questioner is asking is that apparently the stated error rates of up to 30% in government records for various reasons, data entry issues, hacking, fraud, etc. So if that statement is true, then the follow-up check is I guess very important in
It is. I mean, so if you're looking at you know, an ADV form and it says this fund manages $500 million, someone's going to put that into it.
Yeah.
We're going to get the manager's permission to reach out to their prime brokers, their banks and custodians, and say, you know, is this the approximate balance of that? We're going to talk to the fund administrator directly as well. So there's a lot of different ways to triangulate as opposed to just relying upon public records, which I would argue is not ideal.
Let me ask another question, Michael Merrigan, to you, and then I want to come back to Mr. Levien. I'll give you an example. I remember once encountering the following situation. I was talking to a principal at a hedge fund, and they said to me, "Yeah, we run $6 billion. $6 billion." Well, the Form ADV said about 400 million. And so when I confronted the manager with that, they said, "Well, that includes the leverage." Okay, well, that's not the AUM. So I'm just curious, do you encounter a lot of situations like that where, let's say, people, and I'm going to assume, and I do believe that they, although they should have known the right way to state the information, it was an honest mistake. So do you run across this often? Errors like this?
I don't think we run across a lot of errors where people have filled out Form ADV incorrectly, because a lot of them are relying upon consultants and legal counsel to do that. And those people are very experienced at doing that. But we've absolutely run into situations where we were told that cash controls work this way, and we called up a bank or a prime broker and found out they worked a different way.
Right.
Or these people were involved, and then it was only half the people on that list, or there was someone on the list that was, as communicated by the prime broker, that was not on the list that the manager gave us. And
Yes.
so, you know, tides shift from time to time, people come and go, and you have to kind of, you know, you have to look at the facts of what happened in the discussion. Were you trying to be intentionally misled, or was it an oversight, or, you know, and then I think you're also looking at every single situation that we covered, like cash, but also looking at that in the context of the entire situation, right? So a lot of people ask us about smoking guns, and
Right.
I don't see a lot of smoking guns from our perspective. What we find is that there's managers out there where there's a lot of little problems, and those little problems in aggregate cause great concern to people. And so you have to look at all of these different things independently, try to confirm them. And then if a lot of them are off, and off significantly, that's when you start to, you're losing assurance very significantly. And then that's when we have to start having conversations with a client about how we feel about this situation and whether it makes sense to move forward with this.
And I do want to come back to Mr. Levien, but before I do, I want to ask Mr. Merrigan here one follow-up question on this. So is operational due diligence, or at least as you interpret it, is part of it you offering your client an informed view of the business management skills of the manager, their ability to execute as a business person, not just as an investment professional? Because I think what you're saying here is ultimately if the manager lacks the business acumen or the resources to do what they say they're going to do, it could result in a suboptimal outcome.
100%. So we're
Okay.
looking at, you know, the chief financial officer. Have they ever been a chief financial officer before? Are they a CPA? Like what's their experience? You know,
Sure.
is this a firm that doesn't have a lot of operations people and is largely run by investment people? That's something that happens from time to time. There's the beauty of, and part of the fun, I think, of doing ODD is that every year we're meeting with a few hundred investment managers, and they're all different types. They're all different types, different locations, different strategies. And so the way I like to think about it is directly we're doing a lot of ODD work, but indirectly we're gathering a lot of intelligence. And as a result of gathering all that intelligence, we're in a very good position to say, I know that, you know, 90% of the other people we've spoken to this year do this thing this way. you're not doing it that way. And therefore I need to understand, is that intentional? Is it because of ignorance or is it lack of capital to be able to do something a certain way? Or is it intentional that you're not doing that way to mislead people? You know, like what is the purpose of that? And so those are the judgments we're making across, you know, couple of hundred topics that are all in this non-investment purview.
Sure, sure. And Mr. Levien, let me swing back to you on this issue of error rates in government information, et cetera, uh, data entry, hacking, fraud, et cetera. Do you have any thoughts on that? How do you look at this potential for problems?
Sure. So it's easy to kick the government and government regulators, excuse me, and I'll try not to do that because they are performing a very important function and service, and
And they may be listening.
sure, uh, and and they're trying to do a good job.
Yes.
That said, we look at it as the government is trying to do their job, but sometimes the private sector can help augment that. And one kind of example is take a place like Las Vegas. Sure, there's public police there, but the casinos, they're responsible for their own private security, and they have, you know, vulnerable population, elderly people stumbling around with large amounts of money, yet they're relatively safe because of the private security that the casinos provide. And so it would be somewhat similar that although government regulators are trying to do their job and enforce the rules and regulations and, you know, weed out fraudsters, sometimes it takes the private sector to help augment that. And when Mr. Merrigan was talking about, and you were talking about the ADV forms and how they're, uh, you know, self-provided information, it made me think of, we have people who come to us and say, well, I've looked at the subject's LinkedIn profile and it said he worked at Goldman Sachs and went to Harvard Business School. But a LinkedIn profile is similar in that it's all self-reported. And so, you know, part of our job is to go through that and to verify that information, um, to make sure that it's accurate. And the last part that I'll touch on, because Mr. Merrigan mentioned they will look at a, you know, CFO who may or may not have CFO experience. We had a client who had us look at a team of executives, and the CFO had 5 personal tax liens. And it just kind of spooked the client
Sure.
with, if he couldn't take care of his own financial house, how is he going to take care of the company's records as well? And so after they closed on the acquisition, they simply replaced that CFO with a different person. But I just wanted to touch on all those things, and I hope that answered the question, particularly
Absolutely.
about
Thank you.
regulators
Thank you.
versus the private
And
sector. I'm sorry, just to add one last thing with the
please.
inaccuracy in public or government data. Yes, anecdotally, we find that in probably over 50% of the criminal records that we identify for an individual, there's something incorrect. Their name is slightly misspelled. Their date of birth is slightly off. It might be transposed. There's other factors and things like that. And again, that's just one little anecdotal thing, but we can understand that those types of mistakes could perpetuate themselves throughout the system. So if government regulators, they're people too, and they make mistakes. And again, they're trying to do their job, but it's often the the private sector can help augment those reviews and that critical eye to detail.
I find that statement you just made to be pretty disconcerting. The 50% of the criminal records are in some way, shape, or form reflecting inaccuracies. Wow. Wow.
Yeah, and you know, of course, it happens in other record sources in other places. You know, the number of a civil case will get transposed. But again, coming back to something that's rather critical to know if this criminal record pertains to your subject or someone with a similar name and a similar date of birth. And of course, there's lots of people with the same name and the same date of birth, and you have to really zero in and make sure that you're looking at the right thing. And not to go too far with this, but it's not just, government entities. There are private entities as well. There are some of these large data sources that try to aggregate a lot of information, but they'll just simply take one John Smith who lived at Maple Street in Denver, Colorado, and another John Smith who lives on Maple Street in Miami, Florida, and they will then commingle those people, and their data gets all mashed together, and it's very difficult to sometimes pull it apart. I don't want to pick on anybody in particular, but so I'll leave their name out of it. But there was a large news service that used to publish biographies of people, and they would just draw it from all different sources. And routinely, they would be talking about an executive in the pharmaceutical industry, and the middle of his bio, you would see, oh, and he was also the head of this large real estate firm. But he wasn't. It was just somebody with a similar name who was the head of a large real estate firm. And again, they just kind of mashed that information together. And that's some of the problems that you have with both inaccuracies in government public records and on the private side as well.
I have to share this with you. Several years ago, many years ago, in fact, my family was going on a trip, and we had bonus miles with, I think it was some airline. And so my wife called to make the reservations, and she found out the bonus miles, the miles were gone. And she said, "This can't be possible. We haven't traveled anywhere." And so this is actually before 9/11. And so she said to the person on the phone, on the other end of the phone, there must be a mistake. And so the person said, "No, we have you're Robert Akeson." And she said, "Yeah, that's my husband. Yes." And well, there was another Robert Akeson, and there probably aren't a lot of Robert Akesons. Okay. So they gave this guy my miles, and he was flying on my miles. But what really caught my attention, because I'm big into genealogy, I said, I finally found a long lost relative. And so they gave me the information where this guy was, where he lived, over the phone. And I called him up, and I wasn't really so concerned about the miles I lost. I just wanted to meet the guy, but he wanted nothing to do with me. Okay. Because I was taking his miles back. But anyway, I digress. Thank you so much, Michael. So let me ask this question. What services should people be looking for on the ODD side that they may not be aware of? Michael Merrigan, what do you think about that? What services, what comprises a proper and complete background check?
Mm-hmm. So I think that, at the initiation of any new investment, that there should be a comprehensive operational due diligence review done. And that it should include a background check on the key people and maybe even the entity that they're either going to manage the capital or the fund. So that's probably your baseline. And the background check, I think I'll let the other Michael include that. I think he's probably in a better place than that. But I mean, I think we should definitely on this call touch upon how background checks can vary wildly in terms of their scope and depth. And so a lot of times we talk to people about background checks and they're extremely cursory. So I think the other Michael should definitely, talk about that.
Yes.
But I would say, just to round out the point with my role, so definitely an initial ODD, definitely a background check that's really comprehensive. And all that should be done in advance of the funding of this investment. And then I think increasingly, as we were talking about the evolution of ODD in the past, where I talked about how it led into other asset classes, the evolution of ODD is now moving beyond just the work that's done at the inception of the investment. And there's a whole monitoring piece to it now. That could include, updates to background checks. It could include updating the original ODD report every year or two. It could include periodic questionnaires every quarter or semi-annually about certain macro events, like litigation, like regulatory exams, employee turnover, changes to service providers. I think I mentioned audited financial statement reviews every year.
Yes.
And then, so there's a whole, the whole monitoring part of ODD is really another piece of it. The initial is really just the bare minimum that people should be doing, I think, at this point.
Mr. Levien, any thoughts here?
Sure. Well, I feel like I could talk for an hour alone about what comprises a proper background check, but I will try to keep it tight here. Some people, as Mr. Merrigan pointed out, there are wildly different versions or ideas of what a proper background check is. Some individuals think it's verifying somebody's social security number and you're done. Other people think you maybe do that and a criminal record search and you're done. As I mentioned earlier in the call, we look at maybe a dozen to 20 different areas. Again, I won't rattle them all off, but criminal records, civil litigation, liens, judgment, bankruptcies, media, verification of professional licenses, educational degrees. Those are all critical. We like to provide a comprehensive approach because when you start to try to pick and choose, mostly to save costs, you never know where you're going to find the adverse piece of information that could be the difference. Does the person really have their degree? Maybe they're making political contributions to some fringe organization, and that would never surface anywhere else unless you look there as well. So for us, a very broad, comprehensive background check is important. It's important to try to go back as far as the records are reasonably accessible. And Mr. Merrigan made a good point that in addition to updating your ODD periodically, we also recommend updating the background check because you might invest with somebody, in 2024, and if you don't check again between now and 2027, the person, they might have been arrested for DUI several times, which might indicate a drug or alcohol problem. Perhaps they're going through a tumultuous divorce, and that could be distracting to them. Perhaps they've incurred other debts, liens and judgments, tax liens, things like that. And that might be an indication that in 2024, they were an upstanding citizen, but something has clearly happened and they're kind of coming off the rails in different ways. And so it's always good to refresh or update those background checks periodically.
Yes, yes, makes a lot of sense. So, and I think we've covered some of this, but I think it bears focus again. What conditions at a fund or an investment manager creates and signal a high level of operational risk? And gentlemen, in the interest of, we've got 12 minutes left, so try to keep it quick, and I won't tell any more stories. Mr. Merrigan.
So this is the tough part. I mean, you have a process, and hopefully it's a defensible process and it's a robust, comprehensive process, and you gather a lot of facts, and then you can do peer analysis and all that. You have a very, 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 very small number of situations that are so egregious that are just, they get eliminated pretty quickly. And then you have, the situations that are on the border. And unfortunately, there are some of those. And those are judgment calls because no one's clairvoyant. And you really have to take a look at, what are the weaknesses? What is the manager's ability to manipulate those? What's the manager's inclination to mitigate those at your request, right? I see you have this issue. I want you to fix that, et cetera. What's their inclination towards doing that? Some of them are capital intensive. Some of them are not. And then, just in the aggregate, of all of those things, that mosaic, so the background check, the investment due diligence, the ODD, and all of the different considerations, how much money is being invested in, how hard is it to get it back, in terms of the liquidity terms. It's a judgment call. It's a very, very difficult judgment call. And the thing is that everyone has their own operational risk profile. And some people they might be investing their own money, and they may not be that averse to risk. And then other people are fiduciaries, and they're managing other people's money, and they have much more aversion to risk. So it's a difficult decision. It's probably why we think that the Shadmoor philosophy is so much of this is consultative, as opposed to, hey, here's a report, here's a list, go take it. Don't come back to us and ask us really many questions, because everything's in there. It's really trying to understand where are people's pain points, what could go wrong. And I think the last thing I'll say is that people are confident, and so people are like, it's very unlikely that these things happen, or people that were affected by Madoff were not sophisticated people, or were not smart enough. People are, they don't realize how this happens to regular people. It happens to smart people. It happens to sophisticated people, and it can happen to anyone. And so it's really a lot of discussion around all that once you have the whole mosaic put together. And the right decision for one person may not be the right decision for another. It's not necessarily a black and white type of decision.
Right. So Michael Merrigan, I assume what you're also including here is probably a comprehensive review of policies and procedures of the manager to make sure that, let's say, for example, money movements are handled properly, or that principals at the firm, if they have personal accounts, that those which is probably not a good, well, it's a practice that maybe bears some review, things like that, correct?
Yeah, it is. It's a combination of looking at a couple of hundred things that are all non-investment related, including background checks, and then deciding which of these are way off market or way off best practices, then trying to understand how has this hurt other people when they got themselves into managers that had similar situations, similar setups, and then just trying to understand what weighting should we assign to this, low, medium, or high.
Okay. Mr. Levien, any pithy thoughts here?
Sure, I'll try to sum it up in just one or two thoughts.
We have a bunch
Piggybacking
of questions coming in from the audience now, so I want to make sure we get everything in.
Piggybacking off of what Mr. Merrigan just said, again, it seems like you need context for these things. Nothing can be just taken as one absolute thing in a vacuum. It is this blend of all this information, and that's what we tell our clients, that we are providing you with this information so you can make a well-informed decision. And it doesn't guarantee that the decision will be perfect, but at least you made it with all the information that you had available to you.
Thank you. And in from the audience, is it common for firms to have a CEO with business experience that is commensurate in seniority to a firm's CIO? Mr. Merrigan.
I would say that the groups that we're looking at, the investment person is really not looking to run the operations of the firm, and nor is that best practice. So I would say that when you're hiring your sort of head non-investment people, and that typically would be your chief operating officer, chief financial officer, chief compliance officer, chief technology officer, maybe a chief administrative officer. You're really hoping that those people have the commensurate experience to run the size of the organization that this organization aspires to be. So if there's some sort of disconnect where the investment person has a huge amount of investment experience and the non-investment leadership group does not have experience commensurate with, the strategy, the size of the firm, et cetera, that is an absolute concern. There's no doubt about that. And I think that's why the evaluation of the non-investment parts of the business are so critical, because that's what we're trying to prevent the risk in, right? Is the
Yes.
non-investment side of things. And if the people who run it don't have the commensurate experience, you're starting at a bad place.
Mr. Levien, any thoughts on that question?
It's never really been posed to us
Okay,
comparing experience levels, so I'll just,
fair
decline
enough.
to
Thank
comment.
you. So gentlemen, should a hedge fund have a shadow of the administrator?
Yeah, I'm happy to
Gets back-
take that. Yeah. So shadowing is pretty broad. I mean,
Yeah.
so an administrator has a very technical general ledger accounting system that can accrue expenses and all those types of things. The manager typically will not have that in-house. They might have tracking of positions through an order management system or through Excel or something like that. Depending on the strategy, that's probably sufficient. If the investment manager is involved in heavily fixed income oriented type of things that have payments and there's a lot of margin movements and all those types of things, then it probably needs to be a level more sophisticated than Excel or just what's held in the order management system. But those types of in-house general ledger accounting systems are expensive and not always justifiable. Nice to have, but not always needed.
And quite likely beyond the reach of a startup, small or an emerging manager. What do you folks look for from an ODD standpoint when it comes to outsourced trading? Michael Merrigan?
Yeah, I mean, so outsourced trading has definitely become more popular, especially when there's not a high volume of trading. You wouldn't want to see outsourced trading at a quantitative investment firm that's constantly trading electronically. But I think that you're probably focused on that. Is it a reputable organization? What level of discretion do they have? And then how do you calculate best execution?
Okay, fair enough. Michael Levien, do you have any thoughts on that or?
Again, that's a little bit
Yeah.
outside of our scope,
Yep,
so I
yep.
won't comment.
Gentlemen, do outsourced operations give you more or less confidence in a new firm, all things being equal? Michael Merrigan?
Yeah, so I think it's a good thing, and I'll tell you why. I know we're running out of time. Is if you don't have an administrator, the only third-party oversight is going to be an audit annually. That means once out of every 12 months, a third party is evaluating things. If you have an administrator, then they're probably going to have a monthly NAV. So that means at least monthly. It could be quarterly, but at least monthly you have third-party oversight. So you're thinking about your layers of third-party oversight, right? And those are two different groups. If
Yes.
you have an outsourced or co-sourced middle office group because the organization is in its sort of nascent stage, you wouldn't expect that for a really well-developed firm, although certain firms are outsourcing elements of it. It's actually a positive because now I have three groups that I can rely upon to provide independent oversight. I have this outsourced middle office, which is doing some sorts of independent checks daily. Then I have the administrator, which is probably doing them at least monthly or quarterly. And then I have the auditor that's doing them annually. So I think it's a positive, but obviously when an organization reaches a certain size, there's an expectation that a lot of the operations should be brought in-house. That's more normal, I would say.
Fair enough. And what are the pros? Okay, so what does a proper background check cost?
I'll let Michael answer that one.
Sure. So, I mean, you can see, places on the internet that advertise them for, $99, and we tell people you might as well just take $100 bill and throw it out the window. For us, it's usually a few $1,000s. It's, 2,000 to 3,000, 3,500, depending on, the person that you're looking at. Obviously, if you're looking at a centimillionaire or a billionaire, cost can go much higher depending on how many layers you want to dig through.
Sure.
But for us, that's usually a good starting point to get a very good, full, robust picture of a person.
Okay, and let's two final topics before we close here. COVID. COVID certainly has had a major impact on societies all over the globe. How has ODD processes changed in the post-COVID world? be quick on this. Mr. Merrigan.
So it really moved things towards virtual reviews, right? I think before COVID, most of these reviews, these ODD reviews, you spend 3 or 4 hours or so on site. You would travel, visit the manager, things like that.
Yes.
I think that in the post-COVID world, the pendulum sort of swung immediately after COVID to completely virtual. And then I'd say now it's inching back up to maybe, you know, a third or 40% of them are back on site. It's gotten more complicated, and this is unrelated to COVID in the sense that you might want to go and visit a manager on site, but because not all of the employees are there every day because of remote workings, you know, take off, not all the people you want to meet with will necessarily be there. So it's created more flexibility. You know, I think the preference is still to be on site if everyone is there.
Yes.
But that's kind of where we're at right now.
Mr. Levien.
For us, COVID didn't really have an effect other than restrictions to get into courthouses and government buildings and things like that. So for us, it wasn't a huge impact in terms of the work that we do.
Okay. And the final question, what does the future hold for ODD? I think probably on everyone's mind is, to what extent will artificial intelligence play a role in the future of ODD? Mr. Merrigan.
It most likely will have a role. I would say that role is extremely early stages right now with the huge error rate. But I think that you know, to the extent that huge amounts of documents and audited financial statements, Form ADVs and things like that can be used to search for specific things that would deem to be potential concerns would be great, because a lot of that needs to be done, you know, manually right now. But I still think the whole interview process and all that's going to be very important.
Okay. And Mr. Levien.
Very briefly, I would concur. In our view, artificial intelligence is just that. It's artificial. It's not real. It's fake, and it's not where it needs to be. There's still a human analysis and element that is critically important and will be for some time.
Okay, so your jobs are still safe. Good to hear. Good to hear. So, gentlemen, wow. Unfortunately, our time is up. And I do want to thank Michael Levien of LexPRO Research and Michael Merrigan of Shadmoor Advisors for sharing their insights and experience on this most critical topic for investors. I also want to thank our audience and encourage them to check our website for information about upcoming events, especially our next live event on September 17th entitled Allocator and Fund Manager Roundtable. And there will be a cocktail reception as well. Hope to see you then. And again, Michael and Michael, thanks so much.
Thanks,
Thank
Bob.
you, Bob,
Thanks,
and thank you,
Michael.
New York Alt Investments.
Our
Have a
pleasure.
great day, everyone. Appreciate it.
Bye-bye now.